All right, guys, here we go. We are live. It is Saturday, March 7th, 2026. My internet's been screwed up for the last week or so. So I haven't been able to stream or do my videos, but that's okay. I think we're back. I think we're good to go now. So it goes. So it goes. But what we're going to do today, we're going to run through the charts as we do. It's your cousin Dustin. Like and subscribe if you're watching. If you check this video out, like and subscribe it. Besides that, guys, like I said, we're going to look through the charts briefly. And then we're going to dive into two stocks that pique my interest. I don't know what they're going to be just yet. I haven't really thought about it. I'm just trying to get back into the swing of things. We got global turmoil. We got Charlie DuBronx fighting Max Holloway tonight. It's a great time to be alive, guys. It's a great time to be alive, guys. So, yeah, like I said, I'll make this video today, and then I'll make it into two smaller videos covering the two individual stocks that I cover. I don't know what they're going to be yet. I'm kind of winging it a little bit today, but I'm feeling good about the overall idea I have here of covering individual stocks like that. I think that's going to be a more useful like template. So we'll see. Let's see what we've got. So we've got, now this is all since closing. I believe this is since the close on Friday. So we've got the Dow Jones sitting at 47,501.55, down 0.95%. The Dow Jones is below 50,000. The citizenry can complain. The S&P 500 is sitting at 6,740.02. It's down 1.33% today. I keep it moving. The NASDAQ is at 22,387.68, down 1.59%. So you can guess that the global turmoil is probably, shaking up the markets a little bit. They don't like to see that necessarily. So cool. Give me 1 second here. Nobody's watching anyways, but regardless, pretend that people are watching so that we can do this in a professional manner. I'm going to pull it up on my phone just to make sure everything's working right. I look silly with my little bandana and stuff. I look like a freaking pirate. That's alright. What am I going to do? Am I going to get a haircut or am I going to tough it out a little longer? I don't know. We got the Qs sitting at $599.75, down 0.15% today. Hmm. Let's do the heat map. This will give me a good idea of what I might want to cover. Look it up on Wikipedia. That'll do it, huh? Jesus. Looking at the heat map, it's quite red. It's red to dead out there, boy. Palantir's up. Hey. Intuit's up. Let's see, Palantir's up 2.94%. Is that Costco? Palantir's a popular stock. Let's do that. Oh my god, it's time to go to bed. No, it's time to watch these fights here in a few minutes. I'm gonna read this quickly. Alright, so we'll read it like this. We'll do Palantir, and then we'll probably do Costco, maybe. Yeah, that sounds fun. So, before we even read it, I want to download Palantir logo. You guys are really getting the inside scoop here today. I'm holding nothing back. So here we go. Palantir closed on Friday at $152.67. It's currently sitting at $157.16. It's up 2.94% today. On a 5-day chart, it's up 11.58%. On a 1-month chart, it's up 9.97%. On a 6-month chart, it's up 0.68%. Year to date, it's down 11.58%. On a 1-year chart, it's up 85.09%. Over the past 5 years, it's up 556.2%. And on a maximum chart, it's up 1,608.26%. That goes all the way back to October 2nd, 2020. So they haven't been public for too long. Not really. I remember when Palantir was like $10. Should have bought. Actually, I did. I traded it in and out of it, but I just never held it. Regardless, this is not about me, guys. So the PE ratio on Palantir is 248.09. My word. With 2.29 billion shares outstanding and 4,000 employees. They have a 52-week high of $207.52, a 52-week low of $66.12, and an EPS of 63 cents. Has a market cap of $375.72 billion. Jeez Louises. Old Palantir. Let's look at their earnings. Their most recent was posted on February 2nd, 2026. And they beat by 8.6%. They were predicted to get 23 cents. They got 25 cents. They also beat on revenue. They were predicted to get $1.34 billion. They got $1.41 billion, beating by 4.88%. You can listen to their conference call. It's about 47 minutes long if you want to do that. I'm not doing that right now, but let's keep it moving. There we go. The perspectives from across the web. Palantir recovered sharply in early March 2026, gaining over 14% recently. Surging demand for AI-driven defense solutions and record-breaking Q4 results acted as primary catalysts. Analysts project continued expansion through next quarter, through high valuation and heavy insider selling remain key. Sorry about that. Though high valuation and heavy insider selling remain key points of debate for market sentiment. Interesting. The bullish view. Explosive revenue and guidance growth. Palantir reported a 70% year-over-year revenue increase to approximately $1.41 billion in Q4 2025, significantly beating expectations. Management issued a bullish 2026 forecast, guiding for roughly $7.19 billion in full-year revenue, representing a 61% increase fueled by a 143% surge in contractually obligated sales backlog. Defense sector tailwinds and AI demand. Intensifying geopolitical tensions and rising demand for military-grade AI solutions have driven recent price appreciation. The company recently secured a major Department of Homeland Security contract and expanded in its U.S. Navy partnership, while analysts highlight an opportunity to replace restricted AI technologies in federal agencies with Palantir's specialized platforms. Scary. Spooky. Scaling profitability and commercial adoption. U.S. commercial revenue more than doubled in the most recent quarter, rising 137% to over $500 million. The company achieved record GAAP profitability, with net income reaching approximately $609 million, while maintaining an exceptional rule of 40 score near 118%, reflecting efficient growth at a massive scale. Okay. Let's do the bearish view. Extreme valuation concerns. Palantir maintains a high price to earnings ratio of approximately 233, leading some analysts to warn of a potential crash. Critics argue the current price to sales multiple is historically unsustainable for software stocks, making the asset predisposed to sharp declines if AI spending sentiment shifts or economic news turns negative. Substantial insider selling activity. Heavy insider selling has been observed recently, with executives and 10% owners disposing of over 1 million shares valued at approximately $142 million in the last 90 days. Notably, CEO Alex Karp and other top insiders reduced their positions in late February 2026, which can impact broader investor confidence. Oh. Okay, so we've got a series of articles here. Let's try to pick one that is going to work. Here, let's try this one. No, let's do this one. 40 minutes ago. S&P 500 movers. Trade desk surges on CEO buy. Palantir rides geopolitical wave. CrowdStrike earnings and press. Quick read. The S&P 500 dropped nearly 2% last week, but some stocks were big winners. The trade desk jumped 22.9% following CEO Jeff Green's massive $148 million stock buy. That made the trade desk the number one performer in the entire S&P 500 last week. Palantir and CrowdStrike also saw big jumps last week. CrowdStrike's first gap profit and Palantir's defense tech positioning amid a Middle East strikes drove the two stocks higher despite a general market sell-off. Nvidia made early investors rich, but there is a new class of next Nvidia stocks that could be even better. And if you want, you could learn more here. Dogs come in here and act a freaking fool. Okay. This is by Eric Bleeker, published March 7th at 3:14 p.m. That's earlier today. All right. The S&P 500 fell nearly 2% on the week, while the NASDAQ 100 dropped about 1.2%, and the Russell 2000 small cap index tumbled over 4%. The VIX fear gauge climbed to 29.49 and is now up 70% in the past month, reflecting genuine investor unease. Geopolitical tension in the Middle East, tariff uncertainty, and a choppy macro backdrop kept broad indices under pressure. Yet a handful of S&P 500 names surged double digits, driven by earnings catalysts, insider conviction, and defense sector tailwinds. What the heck? The trade desk is up 22.9%. Intuit's up 17.6%. Basel Industries is up 16.7%. CF Industries up 16.3%. Expedia Group is up 15.7%. App11 is up 15.5%. CrowdStrike is up 15.3%. ServiceNow is up 15.1%. Palantir is up 14.6%. And Workday is up 12.9%. They've got a little graphic here if you want to look at that. It's just showing those percentages. Let's dive into why the trade desk, CrowdStrike, and Palantir saw such strong gains in the past 5 days. CrowdStrike posted its first ever GAAP profit. CrowdStrike reported 2026 earnings on March 3rd, and the headline that mattered most wasn't revenue growth, it was the bottom line. CrowdStrike recorded its first ever positive GAAP net income of $38.69 million, flipping from a $86.29 million loss in the same quarter a year ago. Revenue grew 23% year over year to $1.305 billion, edging past estimates. Ending ARR hit $5.25 billion, up 24%, while net new ARR of $330.7 million surged 47% year over year. A record free cash flow margin came in at 29%. 47% year over year is a record. Free cash flow margin came in at 29%. That's a more accurate way to read that. Fiscal year 2026 will go down in our history books as CrowdStrike's best year yet. As enterprises rapidly adopt AI, CrowdStrike is mission critical infrastructure, securing AI across every layer from GPU to agent to prompt. That's CrowdStrike. I don't know why we're reading CrowdStrike, but I guess we're gonna. I guess it's all relatable. It's all related. George Kurtz, CEO of CrowdStrike, Morningstar raised its fair value estimate from $410 to $460, while Barclays maintained a buy with a $550 price target. The stock jumped over 4% the day after earnings and finished the week up 15.3% on the week. A geopolitical tailwind helped too. 149 hacktivist DDoS attacks hit 110 organizations across 16 countries following Middle East conflict escalation, putting cybersecurity names in focus. All these ads. God. We were live blogging CrowdStrike's earnings, and I walked away generally impressed. Net new ARR hit 47%, and the company's guidance for fiscal 2027 slightly exceeded Wall Street expectations on the revenue side. Here we go. Palantir. Palantir rides the defense tech wave. Palantir gained 14.6% this week, driven more by geopolitics than earnings. U.S. military strikes against Iran sent defense stocks surging, with Palantir joining Lockheed Martin and RTX near all-time highs. Palantir sits at the intersection of AI and national security. Its AI platform is deeply embedded in Pentagon intelligence operations, making it a direct beneficiary when defense spending sentiment spikes. The company's Q4 2025 results showed U.S. government revenue of $570 million, up 66% year over year, and management guided for full year 2026 revenue of over $718 billion. Prediction markets confirmed the bullish conviction that Polymarket contract for Palantir closing above $144 for the week resolved yes, with near certainty, with that market drawing the highest trading volume of any price bracket. That's so stupid. But whatever. Trade Desk CEO bets $148 million on a comeback. Trade Desk was the week's biggest gainer at 22.9%, fueled by a stunning show of insider conviction. The biggest gainer among those stocks. I bet I could find a stock that gained more than that. Acquiring nearly back to the article. Acquiring nearly $6.4 million class 6.4 million Class A common shares near the stock's multi-year lows, the largest insider purchase in company history. TTD is down nearly 55% over the past year, battered by a disappointing Q3 2025 earnings miss and competition concerns from vertically integrated platforms like Google and Amazon. Green buying at these levels signals he believes the sell-off is overdone. The market agreed, at least for now. Reddit's stocks lit up with post titled, The Trade Desk CEO Jeff Green bought $148 million worth of shares in the last 2 days, accumulating over 550 upvotes and 100 comments. A thread on Reddit Wall Street Bets drew over 838 upvotes, with retail investors broadly reading the purchase as a confidence signal. Reports of early-stage talks between OpenAI and Trade Desk on a potential advertising partnership circulated mid-week, giving bulls another reason to pile in. Analyst consensus sits at a target price of $31.89 with 19 buy or strong buy ratings against 15 holds. The stock closed the week at $29.28, still well below its 52-week high of $91.45. Against a week where the broad market struggled and the VIX climbed, these three stories showed that individual catalysts still move stocks. Earning milestones, geopolitical tailwinds, and management conviction can each cut through macro noise. All right. So, Palantir, they're here. You know, as things heat up in the national war situation, you know, or global war situation, I guess you could say. You know, Palantir's probably going to see some gains from that. They make money off of that stuff, so something to think about coming up. I don't own Palantir. Probably not really going to buy Palantir anytime soon, but you never know. It's just not. It's not for me. Maybe it's for you. Check it out. See what you think. Like and subscribe, guys. All right. Let's do another one. Let's do another one. I think I have an idea. Actually, let's do this real quick. Let's look at the cryptos real quick. Just to say that we covered all the bases, all the angles. All right, so trending cryptos, we've got on trending cryptos, we've got Block Street. In the past hour, it's up 50.56%, sitting at about 12 cents. In the past 24 hours, it's down 9.2%. Here's a cool one. Immortal Token. In the past hour, it's up 17.84%, and in the past 24 hours, it's up 447.18%. How fun is that? Check that shit out. Digo Finance. In the past 24 hours, it's up 23.86%, and in the past hour, it's up 5.74%, making it currently at 33 cents. Immortal Token's currently at a little over 1 cent. Check it out. Silly, silly stuff. Have a look at bitty Bitcoin. Bitty Bitcoin. Bitcoin is at $67,434.78 a coin. It's up. No, yeah, it's up 0.3% in the past hour. In the past 24 hours, it's down 1.4%. In the past 7 days, it's up 1.3%. So, there you go. Ethereum is sitting at $1,968.77 per Ethereum. And over the past 24 hours, it's down 0.53%. Over the past 7 days, it's up 0.64%. So, there you go. Heat map still looks terrible. It's not going to change much over the weekend here. Micron's down 6.7%. What's that service now? Intuit is up 3.8%. Applied Materials. Applied Materials is the biggest loser I've seen off the top of my fingertips here. Let's do that. Why not? Bro, I cannot spell. Sorry, guys. This is not a freaking spelling bee. I actually can spell really good when I want to, but I don't feel like doing it. I don't feel like thinking that much when I'm looking at this stuff. My mind ain't on spelling. All right, so we got Applied Materials. Let's do it. All right, so we've got Applied Materials Incorporated. All right, they're currently sitting at $324.74. It's Saturday, March 7th, right now, 2026. So on a 1-day chart, they are down 6.29%. On a 5-day chart, they're down 11.15%. On a 1-month chart, they're down 1.76%. On a 6-month chart, they're up 100.39%. On a year to date, they're up 26.36%. On a 1-year chart, they're up 108.59%. On a 5-year chart, they're up 186.24%. On a maximum chart, Applied Materials Incorporated is up 154,538.1%. And that goes all the way back to 1986, April 4th. Pretty cool. All right. So let's do their stats first. Okay. Sorry about that. I'll have to wait a second. I'm trying to wait for my damn heat thing to shut off so I stop making all that damn noise. Ugh. All right, here we go. Applied Materials has a 52-week high of $395.95, a 52-week low of $123.74. They have a dividend of 0.57%, a quarterly dividend of 0.46 cents. They have a PE ratio of 33.27, an EPS of 9.76, and 793.61 million shares outstanding with 36,000 employees. They have a market cap of $257.72 billion. Pretty sweet. So, perspectives from across the web. We've got Applied Materials surged 8.9% over the past month, reaching record highs before a recent sector-wide sell-off. Gains were driven by a strong Q1 earnings beat and robust AI-related demand. Analysts projected continued growth next quarter, with management expecting over 20% equipment sales growth in 2026. Sweet. Bullish view. The Bullish view. Robust AI driven growth projections. Management anticipates over 20% growth in semiconductor equipment sales for calendar 2026, fueled by accelerating investments in AI computing, high bandwidth memory, and advanced packaging. Analysts from Stifel and TD Cowen recently raised price targets to $450, reflecting optimism in these technology inflections. Strong financial performance and guidance. The company reported Q1 2026 non-GAAP EPS of $2.38, beating consensus estimates by about 4.7%. Forward guidance for 2026 remains strong with projected revenue of $7.65 billion, plus or minus $500 million, and non-GAAP EPS of approximately $2.64. Give or take a 500 million. Who gives it? Who cares? That's silly. That's crazy. Consistent capital allocation strategy. Applied Materials maintained its quarterly dividend of 46 cents and returned $702 million to shareholders via buybacks and dividends in Q1, with approximately $14 billion remaining in share repurchase authorization. The company continues its decade-long trend of distributing nearly 90% of free cash flow to investors. The bearish view. Geopolitical and macroeconomic headwinds. Recent sector-wide volatility linked to the Iran conflict has sparked fears of global energy price shocks and higher operating costs. Additionally, the company was recently fined $252 million for unlawful re-exports to China, highlighting persistent regulatory and trade risks in critical international markets. What? Valuation and profit-taking concerns. Despite strong performance, some metrics suggest the stock may be overvalued with a trailing PE of approximately 33.3 and a narrative indicating it could be over 80% overvalued. Recent pullbacks suggest investors may be taking profits as the price nears its 52-week high. That's Applied Materials. Forgot to look at their earnings. We'll look real quick. They reported on February 12th. They beat EPS. They were estimated to get 2.21. They got 2.38, beating by 7.89%. They also beat on revenue. They were expected to get $6.88 billion, and they got $7.01 billion, beating by 1.92%. A little less than 2% there. Modest beat, but a beat nonetheless. Got their earnings call there. You can listen to that. It's over an hour long. I'm not listening to that right now. I'm not doing that right now. Which one we want to do? We got... Let's do this one. So maybe from now on we'll just do whatever one is the next one. That's probably the fairest way. Or we won't do that. Because this one won't let you read it. So, thanks a lot. Do the next one. Alright. Why Applied Materials stock is sliding even as AI chip spending stays hot. This is yesterday by Conrad Wasaki. It's a cool name. Applied Materials shares fell 3.1% on Thursday to $346.53, leaving the chip equipment maker about 12.5% below the February 25th high it reached after last month's AI-driven rally. Oops. The slip matters because Applied has become one of Wall Street's clearer plays on the AI build-out. When the company issued a stronger than expected outlook last month, the stock jumped 11%, and Morningstar analyst William Kerwin said, artificial intelligence infrastructure demand is immense and supply is scarce. Applied had forecast second quarter sales of about $7.65 billion, well above analyst estimates, and Chief Executive Gary Dickerson said the outlook was fueled by the acceleration of industry investments in AI computing. Tim Schultz-Melander, an analyst at Rothschild and Company, Redburn, said at the time that memory and logic foundry CapEx growth are two sides of the same coin. CapEx, meaning capital spending, high bandwidth memory or HBM, is stacked memory used alongside AI processors, while logic chips are the processors that do the computing work. That wider spending story is still here. Broadcom said that this week that its AI chip revenue could top $100 billion in 2027, while Reuters reported big technology companies are expected to spend at least $630 billion this year on AI infrastructure. The industry group, has forecast global chip equipment sales will rise 9% to $129 billion in 2026. That is the backdrop supporting Applied, the U.S. peers LAM Research and KLA. Applied's own executives have leaned into the case at a Morgan Stanley conference on March 2nd. Semiconductor Products Group President Prabhu Raja said, the short answer is we are in a much, much better place, pointing to earlier customer visibility, tighter supplier planning, and factory capacity that he said could double from pre-COVID levels. He also flagged HBM packaging and 3D chiplet stacking methods used to connect or stack advanced chips as strong growth areas for 2026. The field is getting tighter, not looser. Pause. Dutch peer ASML told Reuters earlier this week it wants a bigger role in advanced packaging for AI chips. and Chief Technology Officer Marco Pieters said accuracy is becoming more and more important as chip designs move towards stacked structures. That matters for Applied because advanced packaging is becoming one of the richer parts of the AI of the chip making chain. But there is a harder edge to the story. Last month, Applied agreed to pay $252 million to settle U.S. allegations that it illegally exported ion implanters, a key chip-making tool, to China's top chipmaker, Semiconductor Manufacturing International Corp., or SMIC, through a South Korean unit. Applied has also said tighter U.S. export controls will weaken China's spending in 2026. And Dickerson said the company's China revenue share had fallen from nearly 40% to the mid 20% range because some overseas rivals could still sell where Applied could not. Thursday's market backdrop gave investors one more reason to step back U.S. stocks closed lower as the Middle East conflict pushed oil up 8% and revived inflation worries, with the Dow down 1.61%, the S&P 500 off 0.56%, and the Nasdaq lower by 0.26%. Ugh. For Applied, that kind of macro jolt can still swamp a strong AI narrative at least for a day. That's it. Conrad Wiyasaki. All right. So Applied Materials. Let's ask Gemini, what does Applied Materials do? Because I still didn't really get a clear answer there. I want to have a better understanding of this company. Applied Materials, often called Applied or AMAT, is a global leader in materials engineering. If you use a device with a screen or a processor like a smartphone, laptop, or a car, it was likely made using their equipment. Rather than making the chips themselves like Intel or Nvidia, Applied Materials builds the massive, highly complex machines that semiconductor fabs like TSMC or Samsung use to actually manufacture those chips. Ooh, that's pretty cool. What they do. The construction crew for chips. Think of a computer chip as a skyscraper with billions of rooms, transistors. Applied Materials provided the tools to build the skyscraper at the atomic level. Wow. Semiconductor systems. This is their core business. They provide specialized machines for every step of the wafer fabrication process: deposition, growing, or spraying thin layers of materials like copper or silicon onto a wafer with atomic precision. Etching, using chemicals or plasma to carve intricate patterns into those layers. Modification, using ion implantation or heat to change the electrical properties of specific parts of the chip. Inspection and metrology, using AI-powered electron beams to find defects so small that they can't be seen with light. Whoa. Display and adjacent markets. Applied also makes the equipment used to manufacture high-resolution displays for TVs, tablets, and smartphones. This includes OLED and LCD technology. Tools that deposit the thin film transistors that tell each pixel when to light up. Flexible electronics. Systems that allow screens to curve or fold. Y'all didn't even know that, bro. Y'all didn't even know all this. Applied Global Services. Since their machines cost tens of millions of dollars and are expected to run 24/7, a huge part of their business is after sales. They provide replacement parts and sensors, automation software to make factories more efficient, refurbishing older machines to give them a second life. Why they matter right now. Applied Materials is a bellwether for the tech industry because they sit at the very beginning of the supply chain. Their performance often predicts where tech is going next. The AI boom. AI chicks AI chicks ugh, AI chips require heterogeneous integration, stacking different chips together. Applied is one of the few companies with the tech to make this possible. The angstrom era. As chips get smaller than 2 nanometers, traditional physics starts to fail. Applied specializes in the new materials like cobalt or ruthenium needed to keep Moore's Law alive. No, that's enough. Okay. Mm-mm. Applied materials. How interesting is that? So, what do we learn here today? Um, I have a much better understanding of what applied materials does. Am I gonna buy this stock? Maybe, probably not. But maybe you will. So let me know in the comments. Are you buying applied materials? Did you learn anything here today? Hopefully you did. Hopefully you didn't. I don't know. Good stuff, guys. So I'm gonna start editing these videos. Get ready to watch my fights. That was perfect timing. That took the perfect amount of time. Very cool. So, guys, if anybody ever watches this, like and subscribe. Who do you got? Charles DeBronx or Max Holloway? Um, who do you got? Iran or America? Uh, you know, it's a mess. I'm gonna do my best to bring some positivity to you guys. I don't want to, it's not the world's not all doom and gloom. There's money to be made and stocks to trade. Money to be made and stocks to trade. So, yeah, I guess that's it.